the two markets that I think can give us some indication of what stocks will do going forward are specifically in Bitcoin and the yen. And the main reason why I'm very cautious after looking through the charts today are when I see the yen have this upward move, and consequently continue to see Bitcoin in this downtrend going lower. Bitcoin, as I have said over and over again, has a very high correlation to liquidity and typically is a leading indicator. It moves ahead of what tech stocks do, even though it's kind of bounced recently and it's above this low that we had on February 6th. I need to see a big move higher in Bitcoin, and consequently, I want to see the yen have a big move lower and test this low here at 63.59, trade below this 20-day moving average, and start a down move towards 63.40, 63.35, and so forth. And the reason for that is one of the main drivers in this big upward move that we've had in the markets over the past couple years has been a trade called the yen carry trade. And what investors do is they borrow money in yen terms at low interest rates because Japanese interest rates are very low. They then convert that money into dollars at higher interest rates and then take that profit in the interest rate, lever up that money, and then invest it in tech stocks. And that has been a constant trade that has gone on for many, many years. When you have aggressive upward moves in the yen, that hinders the yen carry trade. And it basically takes liquidity out of that yen carry trade. The hedge funds and market participants that are taking place in that trade, borrowing money from yen terms at lower interest rates and then converting that to US dollars at higher interest rates, then levering that money and then buying stocks. Because they lever arbitrage between Japanese interest rates and US interest rates, there's an arbitrage in interest rates between yen interest rates, Japanese interest rates, and dollar interest rates, the US interest rates, and then doing a dispersion trade by buying stocks with that leveraged money. And when you get a big move in the underlying yen, it offsets that. If you want a clue on any given day as to what stocks are going to do, look at the yen and then look at Bitcoin. Bitcoin, because it's just a proxy for global liquidity, and it is highly correlated with global liquidity, and it is highly correlated to tech stocks and usually leads tech stocks by a specific time. So the fact that Bitcoin has been dragging and in this strong downtrend is an overall hindrance to what tech stocks do. And we have seen this pattern happen over and over again over the past 15, 16 years, ever since, the end of the global financial crisis. And we have seen the same pattern take place in the yen. When you get a big rally in the yen, you usually see stocks and specifically tech stocks in general